All right. This is part 2, my new strategy. So this is a live trade right now. You see I have 6 contracts at different places. We are going to go over the new method. The new method is, okay, so I guess I have 2. We'll use the base, right? I'll go to EQ because it's clear. Essentially, what we're doing is using ORB, fair value gap. So basically all ICT terms, fair value gaps, ORBs, we're using, the ORB, we're using inverse fair value gaps, we're using supply and demand, we're using support and resistance, using everything we can to figure out and to support theories about what's happening on price. And one thing we added was the relative strength index. This is the RSI. I'm getting kind of scared. How much am I up? Oh, damn. I gotta trust it. Just a little bit. Okay. The relative strength index. Okay. So essentially what we're doing is we're trying to find divergences within the market. So normally the market, we have our normal higher highs, lower lows, right? This is a bullish trend. Normal, we already went over that, right? Then we have a bearish trend, lower highs, lower lows, right? Simple, easy enough to learn, right? Easy enough to figure out. Wait, let me open. Sorry, let me open my Tradeify, Trade of 8, just to make sure. Oh, I'm at 360 right now. We're pumping right now. Wait, I'm gonna check on MNQ real quick just to make sure. Dumping, sorry. Okay, so this is an example. This is just a small example first, and then we'll go back. This is a live trade, so this is a strategy plus live trade video. So I'll just show you real quick. We pushed up all the way. You see, we're going to a 3-minute, go to a little bit higher time frame because 1 minute's kind of iffy on trust. And you see, this is lower than this price. This price pushed up so fast that the strength index is saying no, it's lower. So look, from this crest, so this divergence to this divergence is going down. So price will go down where? At the whatever the lowest point is in between, which is here. Really here, I have my sales right here, just because. I'll put $1. Just because I want it like that. So this is basically the strength. You see, our ORB this morning on NASDAQ was absolutely massive. So we aren't just going straight off ORB, but the ORB, it's a lot of lines, I'm sorry. The ORB is working. You see, break. This is in a 3-minute. Break, retest, higher highs. Straight ORB, but this way you get into more trades essentially and know exactly what you're doing. So if you look in the 3-minute, right? We have this crest here, which is high, but this crest is higher in reality. I call it reality in like charts. It is higher. It should be, you would say, hey, higher high, lower high, higher high, 0.1, 0.2. This is bullish. But our RSI is disagreeing, and this is a divergence. So this may be bullish, but price will have to retest, and we're double checking it with boom. This is just a draw liquidity. We just got this liquidity draw, and what we're doing, we got all of those. We're going down and we're retesting. We're just correcting a little bit. Look at me. Should drop down there. I'm lowering to break even on my stops. Should go down there, but we getting our draw on liquidity, and I'm sorry about the lines, guys.
Stop filled.
Right one. 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 . 1 I've been in a drought. Well, not in a drought. I've been losing some, so that's why you see me sold too, just in case. I do see price dropping down, so I might add more. But anyways, we go on our 1 minute and we can just say, okay, from here to here is higher, and this isn't really a crest, this is just an upstring, and it's showing that. So boom, that's not liquidity draw. I mean, that is not confluent with the strategy. But we know, because if we, even in the 1 minute, you see how far it is. This price to this price, wait, where is it? What am I doing? I'm sorry, my brain. I just show you an example. I just got in a trade here too. So you see, this is very overbought, right? Price is up here, and then it went all the way up to here, right? Real fast. But if you look on the RSI, it's going down right here, right? So what I do, I found the point in between point 1 and point 2. Price should drop down to here. And look what I did. I got in here. Price went a little bit. Your stop loss is supposed to be above the second point, but I like to just put it a little bit above because we're at the top and we're getting draws of liquidity. We want to get a little bit higher because you see, boom, it just went a little bit higher, got the draw. And where did it drop to? All the way, the bottom point. The point between point 1 and point 2. And what's the lowest point? Here. And look where it stopped. Right down there. Sorry. Right there. Right at that wick. Why did it just log me out? Right there. We got out and we went into another one. I'll show you again. We went into this one. Price jumped up crazy. Like, oh my God, what's happening? Price jumped up crazy. We can go in 3 minute, just to, like, 1 minute is not too, like, 1 minute, I wouldn't mess with the 1 minute. You can mess with 1 minute. 3 minutes minimum. The higher time frame you are, is like basically like your trend lines and all that. You know, you want higher confluence to show you, you know, where you should be. But what was I saying? I don't know what I was saying. Anyways, oh yeah, I'll show you. So look at our RSI. I don't know how that keeps happening. Okay, RSI, this bottom point to this point is going down. Listen, I'm not too good at these bottom ones yet, but I know for sure the top ones, I'm getting them. So you see from here to here, you see I drew it out. It's going up, it's going down. Where price have to go? Down. This is my current trade. The bottom point between, I'm not going to go down there at this big liquidity drop. I'm just having my things here, and I'm just going to still stop just because I'm not too sure about that. But the theory is it should, let me get one out. Right there. Right here. So I'm just trailing stop. I'm up 564 on these 4 contracts. Would have been up more if I had left those other ones in, but I'm just trailing stop. Because I don't really care about take profit. Right above here, price should probably go here, go up a little bit because this was the level of resistance or whatever. Let's see, we're at 598. Let's see the count. I was just at 5,000, so we're at about $1,200 trade.
Order filled.
Got me out one.
Stop filled.
I get out the other one. I get out the other one just because I'm just getting quick cash, right? But you see, we just made $1,000, right? And if you were just doing the ORB strategy, you're gonna say, hey, Jogo, ORB here. We'll go in the 1 minute, right? If we beat the ORB, because it's such a massive ORB, we don't want to just we want to make money on these runs, right? We want to make money on these. This is all, especially on NQ and you're doing these contracts, you're making big money, right? So we want to say, hey, let's make money instead of just being super conservative. If you want to be conservative or be the other way, right? I want to be conservative and make money at the same time. And because I'm doing my eval, I need a pass right now, and I need like big funds. So I went down last night. I'm just trying to get big funds, right? So you see RB, we went up, down, right? Didn't break through, just wicks. Where we go? Up. We got if you would have maybe looked in the 30-second, maybe it would have been a fair value gap or something. But we went up, retest down. We could have waited to here, didn't break. Say, okay, we're going up. Boom. But then it's like you just made from here to here. That's like cool change. That's good. That's good amount of money actually. Cool from here to here. Still could be a good amount of money. But then you hit this liquidity. This basically the divergence just lets you know kind of ahead of the curve, right? It just lets you know things ahead of the curve, because if I was just using the ORB method and I just seen this liquidity, I know price may go down and do this, but I don't know how far, and I'd probably think this level. I'm like, why is it jumping this level? Like this RSI plus all these are fair value gaps adds so much information that you need. Like for example, this is the 3-minute fair value gap paired with the divergence. I knew price was going up here. We're pushing past this relatively new level of liquidity. I get mine up here, get mine here, right? And I say, okay, boom, we have a bullish fair value gap right here. You see it? Bullish fair value gap. And I say, oh, I could wait. I would have had to wait until price settles, right? Until price settles and breaks past this fair value gap, which isn't bad. Or I could get in up here because I know with this, or to be extra safe, wait for this fair value gap. And we inversed it, and look what we did. We inversed the fair value gap. You could even got here on this small pullback, and you're still down. You're still pulling all the way down. So if I go, I'm gonna go to NQ and just explain it to you guys on this again, right? Right. So we have a regular up down divergence. We want our RSI to tell us other things. So say this is here. This is a divergence. This is divergence from gap to gap. But on the RSI, say, wait, watch this. Say we get prices going here. Say price does this, right? This is on the charts, okay? Price does this, we have equal highs, and we've got up higher, right? What would this be called, guys? This would be called, what? I hate that green. It's so ugly. Equal highs, crash, lower low. So this is what? A good example of what? Breaking past structure and liquidity sweep, correct? Because we got our first low here. We hit this level of resistance, got our first low, hit the level of resistance, went down lower. And you're going to say, Juggo, why the heck did we go down lower? Say this was just down here. This was a level of liquidity needed to push this past. And what we gathered all this liquidity down here, up here, which were resting sell orders, right? I mean, resting stop losses for the shorting. So if I'm shorting and I want my price and I'm looking for price to go down here, I'm going to put my stop loss above, right? I'm going to put my stop loss above this level of liquidity. And I mean, this level of resistance, because I'm looking for price to go down. And if price goes above, I know that it's a break of structure, and we're most likely what? We're most likely going from shorts to longs. So I want to get out before I end up losing too much money. So you see here, just going off liquidity sweep itself, you can wait for a fair value gap to form on the break and breakup structure and all these different confluences, you could also incorporate the RSI. So I'm just gonna do this. This line is just a mirror, okay? This is like this little barrier. The RSI is gonna look like, say the RSI looks like this. We look proportionate, right? Most likely gonna look like that. And then look, I'm gonna draw it right here. Okay? So you're gonna say, Jogo, what? This is just one example. This is the main way I'm trading divergence. I haven't mastered it on the bottom side yet, okay? But you say, Jogo, what the heck, right? This is different. This is going up. Say this goes up and settles down here. That this is saying, so you have to wait till it ends, right? You have to wait till the cycle ends. So say this is a 15-minute marker, right? In 15 minutes, price can go up here, price can go up here, price can go up here, anywhere, right? So you want to wait for price to end. And if it ends on a low, and this is ends on a high, like it's not ending, like this is not end right now. Like this would be the end, theoretically, right? This is the end. That is the end. And then same here. This would be the end, right? Something like that, right? We know this is going up, but this is going down. And you're going to say, wait, even though this is higher than this point, the strength index is still calling it down. So what we would do, we would call what's the lowest point in between these two? This point, right? So we know, say this is 15 minutes, or say this is an hour. We know at some point in the hour chart, price should drop down to this level. And this is a big win if you were getting here, right? So if you go into 1 minute, price might go like this, like da 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 da. Like go up and down. Boom, 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 boom. People got short out. You just made all that money holding it long. So you have a live account, you're good. So say this is in an hour, you would want to try to find the divergence in the 15 minute, then the 3 minute, to just know, okay, if it's in the 3 minute and it's in the 15 minute, and I see it with this fair value gap and with this and with that, price is about to drop. So you could go here and wait an hour and be stressed out when you're like say price goes up here or something, you're like negative $500 for like 30 minutes, you're stressed. Or you could go and wait a little bit and just trade these consolidations if you want, if they're big enough swings. Like that $1,000 win was just a swing, in consolidation swings, in and out like that. And look, price drops down because the RSI showed that price is going down. And I've been winning off of this. So I'm going to show you I'm going to look right now. What you just saw, we just did this. We just finished that. I'm sorry. We just finished. What is that called? We just finished that run, right? So in the 15 minute, it's like, oh, baby steps. Look at this. This is just consolidation. This is consolidation. Just consolidation. And that. How much money on 6 contracts? That was, right? I'm going to go to 3 minute for you guys. And I'm going to see if price hits at that level and what it's doing. So we have on the 5 minute, okay, lower high, higher high, but this is higher high, lower high. And what did price do? Form in between. It has to drop to this point. We could do body. If we hit body, we hit it. We can do wick. This wick, hit it. Maybe we're going to go down this wick, and what we're going to do, we're testing this level. Maybe we're going to dump further. Who knows, right? Who knows? By the rules, I'm pretty sure this is supposed to hit even the bottom of the wick, but I'm not too sure. But this box is what? A fair value gap. Look how price is just reacting to the fair value gap. Bullish fair value gap. So even though we dropped, we're still reversing onto fair value gap. So we can say in an hour, boom, maybe we're going to go up. Who knows? Let's go into the minutes and let's see what price is doing. Okay. We have, sorry, this is my 200 EMA and this is my VWAP. Okay. 200 EMA is going, so it may, but I've been seeing, look at that. Look, I got out at the perfect time. I love the stuff. I love to trail my losses. Look at that. I would just waited for take profit, and sometimes take profit just barely hits, and boom, look at this. It's ridiculous. That's ridiculous. Now look, this is only 1 minute. That was a ridiculous volume. That was in no time. That was in no time at all. If I look on when this finishes in 34 seconds, I can say, hey, from price here to price here is lower. That supports the lower. From price here to price here is higher. That supports the higher. There's no divergence here. So we don't need price to return here. We're still waiting for price to break that initial structure, which was here, right? On the 3 minute. I'm new to this strategy, so I don't know the ins and outs. This is my second day trading it. Second 2.5 days trading it. Yeah, we could look at my Lucid accounts. You see my consistency was terrible. Oh, coming back. 1200 again. I'm coming back. I need to make 3,000 to make 3,000 by today, hopefully. If not the 6 p.m. Tokyo session. But yeah, this is how I've been making money. This is how I've been doing it and this is how you're able to do more things than just O or a B. Like when I get my funded, I'm gonna do this. I'll do RB and just get really secure spots. So I'd wait for like different levels. I think like say there's 5 confluences total. I can get like 3 out of 5, and that's fine. But you see, if we would have just ping ponged off or B, we would have like not known a lot, missed out on a lot. Especially when price is going in, I saw the divergence, and that's the scary part. When price is going up, and you're like, no, it's gonna reverse. It's telling me. It's not me predicting. It's letting me know this is what I'm gonna do. That's the most beautiful part. So let me know if you understood this. I'm gonna go live trading every day, so you'll see more examples. Or we could even go real quick and just find a random example. Let me turn this freaking ORB off.